Welcome back to Blockchain Radio. I'm Pierre Bourque. Today in conversation with the doctor, the professor, James Bowen. Hello, James. How are you today?
Thank you, Pierre. Thank you for having me here on this great day.
Well, it is a great day. You've got a brand new book, FrontRunner Investing. Tell us about this book. What was the genesis of it?
Well, the genesis of it was quite simple. I've had conversations with people who have looked at doing investing and heard heard really bad stories in terms of their accomplishments. I had a story with an individual who I was sitting on a train when a while back, and he was a retired individual, and he was talking about how he had invested all his money in I think it was a junior mining company, and it went from a dollar, essentially a dollar a share, down to 10 cents a share, and he had invested most of his pension in it. So, a 90% loss. And I asked him, where where do you get your investing advice? And he was saying, well, I just look online onto the various stock market sites and see which one are going up in value. So he knew nothing about mining, and he just put all his money in based on some stock that was going up in value and essentially lost 90% of it. And I've heard other stories of that, of people who have said to me, I don't have time for investing, or, I'm too early in my life cycle to start investing, or I might lose money on investing. And yet, investing is so critical to everything that we're trying to do in life. It's the savings account, just putting money in the bank account and trying to earn interest on it is not enough. So I thought to myself, I really should take what I'm doing and write it out as a book, as a methodology, as a way of providing structure around investing, and that formed the thought process that what we need to do is we need to write a book for the average person, because too often some of the investing books that I've read, they focus on people that have advantages based on the data, the information, the algorithms, or the position that they have in life. And I didn't see a book that really took the point of view or the assumption that an average person might have of, they've just got some money, they're trying to put it aside. But more critically is that they have a long time horizon. And that long time horizon, maybe decades of time, distinguishes the average person, you and I, from the professional. And that time horizon, time changes the rules, form the basis for the book itself.
Now, James, are you saying that long time horizons are something that the layperson is more focused on rather than the investing professional that we may rely on for advice, or is it the opposite?
You're correct the first time around, Pierre. The professional, the day traders, short-term investors, are the professionals running the mutual funds. Professionals being individuals that are investing other people's money. They're looking at quarter to quarter returns every 6 months, every year. They want to see increases. And if they don't see that their stock or their investments are increasing from every 3 months, then they abandon that opportunity and move on to something else. So their investment time horizon is very focused on short-term metrics. Well, the average person, you and I, we can look at decades, and having that long-term horizon, or that infinite game, means that we don't have to play by the same rules. Just because a stock is down or an investment is down for a quarter, or if it hasn't gone anywhere in a quarter, uh, doesn't mean that we have to abandon it and move on. We can look at an industry or an opportunity and say, how's that going to be over the next 10 years or 5 years? And companies need time to put things in place. They need time to have a turnaround. They need time to develop a strategy and implement it. And that isn't a 4 month time window. That can be years. So the average person, you and I, we can look at something in over years and put our money where in 5 years from now, 10 years from now, we'll see significant returns. And that gives us an advantage over the professional who has to have that quarter by quarter profit.
Yeah, and as I'm listening to you, I'm reminded that today's society is increasingly propelled towards an almost immediate return on whatever their activity happens to be. It seems to be why social media in general is so popular with people, with likes and thumbs up and so forth. They do something, they want to see the reaction from their followers, their peeps, and they want that immediately. There's that sense that I don't want to wait too long. That's a whole motion throughout Western societies, that those time frames that you're pointing out, and I agree with what you're saying. It's also interesting that the average person in their life has a much more short-term philosophy of about a lot of the things. They're driving along, they're hungry. I'm going to stop at McDonald's and get myself a quarter pounder with cheese. And then that whole sense of how they go through their day-to-day activities seems a disconnect to how they should be considering their financing and their investments.
You're absolutely right, Pierre. That short-term horizon or is all throughout our society. And but if we think of innovation that comes to market, if we think of companies and what they need to do, let's say to turn around or to grow their company, that doesn't happen in a couple of months. That can take years. If we think of any kind of industry that has big capital investments or takes time to acquire customers, or even a company that comes onto the stock market with an IPO and they've got money and now they're going to deploy it, that can take time. If we think of real estate, we buy a house and we've had to put some money into it. It takes time for that return on investment to happen, just to break even, and that can take 2 3 years before we've paid back all the transaction costs, and then it takes a while for the house to pay off. And if we look at even some of the commodities like gold and silver tends to increase by, let's say, 5 to 10% a year. But to buy gold costs money. You have to pay money to whoever you're buying it from. And then when you sell it, whoever you sell it to tends to buy it a little below the spot price. So even if you buy gold or silver, it's cost you 5%. And that 5% could take a year before you've broken even on it. So almost anything, any of these investments take a year or something for you to, look at breaking even, and then you're making money on top of that. But more interestingly enough is the cumulative effect. If we make an investment and we're earning 5 to 10% on it, we can double our money with a 7% return in 10 years, I believe it is. And so if we look at the cumulative effect of money on top of money, after a while it becomes really significant, and that occurs over time, where we've made 5% this year and then we made 5% on that 5%, et cetera, et cetera. Over time that becomes very significant. So everything has to do with time and positioning ourselves so that we can put our investments into play over time and look at 10, 20, 30-year time horizons is a huge advantage that you and I as individuals have over the professionals. And this book says that we should exploit that. We have time on our side. Why play by their rules? Why not play by the rules that we can utilize based on a longer time horizon?
To our listeners, that we're in conversation with Professor James Bowen, a doctor no less, and as well the author of the new book FrontRunner Investing. Before we leave our conversation, James, I'll ask you to tell our listeners how they can find your book. But before we get to that point, some thoughts that came up to my mind in the context of our listeners, where many of them are invested into the crypto community, and the wild swings that we've seen in the values of various cryptos. In fact, earlier this month, I was at a meetup here in Ottawa, Canada, where I'm based, and it was a crypto meetup, and the participants who were there, and I was just a fly on the wall, but it was fascinating to hear them talk about the various cryptos that they invest in. And while they have their normal non-crypto lives where they earn income, they have lives, they have family, and so forth, they take some of their biweekly earnings and buy some crypto. But to a T, each and every one of the people who were in attendance were telling me that they hold their crypto. So they're hodlers, to use the vernacular of the community. They hold on for dear life, HODL, hodlers. And so they're buying this crypto. It goes up and down, massive wild swings, and yet they hang on for the longer term. So even in that context, we see that they, to use your words, they are grappling with method over the emotions of the moment, and that's another key takeaway from your book.
Pierre, if we look at cryptocurrencies, particularly back in 2000, I think it was 2017, when the value of cryptocurrency went up to $20, 20,000 US dollars,
Bitcoin, yeah.
and in terms of Bitcoin, right? So what occurred there was that a lot of short-term investors came into the market, and I was looking at what was occurring there at that time, and there was a real spike up. And if you look at who was piling in at that time, they were all the short-term investors. They're all the people who are more akin to gamblers than investors. And so that spiked, and then it went up and down. But the use case of blockchain is still there, as you're well aware, cryptocurrency being one application of that. So over the time horizon, if we look at a 10-year time horizon, the value of it is there, but we're going to see that fluctuation up and down because there are so many short-term traders who are looking at gaining small amounts here and there. If you look at anything that has let's say a $10,000 per coin or $10,000 per unit, if you take a 1% increase or 2% increase on that, the absolute increase or the percentage is significant. So there are going to be people who are going to be attracted to something which has a high dollar value over it, because a simple 1 or 2% increase is a large absolute number increase. So there's always going to be people who are going to be attracted just to ride it up and down 1%, 2%, 3%, whatever, 5% up and down. And that shouldn't deter the long-term investor who is looking at what it's going to be like in 10 years from now or 20 years from now.
James, the book itself, and you may have touched on it here in your descriptions, but if I were to ask you specifically, what's the book's noble causes? How would you describe that?
The noble cause is it goes back to some of the earlier books that I did. As you're aware, Pierre, I was the originator of the Startup Canada Startup Awards, and I used two books at that time. I wrote two books with some 70 other co-authors who contributed articles to the book that I put together, and that was used to fund the awards themselves, the initial kickoff of those awards. Now, what I'm looking at is using this book and the royalties of this book. I'm going to divide it into three portions. One is to support the next phase of Startup Canada's Startup Awards. Two is CATA, the Canadian Advanced Technology Alliance. They have a very cool award, the Sarah Kirk Award, and I want some of the money to go to there. And three, I want to have a website in which the average person, you and I, can talk about innovation, growth economies, and how we can profit over the long term. So I'm looking at using the third portion to fund a conversation site for the average person to be able to participate, because financial inclusion is a topic that we all need to be part of. Everybody should be part of in financial investing and profiting from innovation, growth, etc. We as individuals, that's a tremendous opportunity for us. So I'm gonna use a third portion to fund the development of a conversation site for financial investing inclusion.
Yeah, and I think that all of those points are valid as noble causes. That last one, in particular, conversation, exchange through dialogue is so important these days. And the opportunity for people who are unsure to ask questions of those who are more sure, and to get some clarity through that. James Bowen, professor, doctor, and author with us today. FrontRunner Investing is the book. Where can our listeners get a hold of a copy, James?
Pierre, they can either go to Amazon and find it there, FrontRunner Investing, or they can go to my site, frontrunnerinvesting.com, and then from there click over to Amazon.
James Bowen, a pleasure talking with you. Let's recalibrate things in the coming weeks and months as things evolve on your end, and talk again to see how things are developing.
Thank you, Pierre. Never stop investing.
All right, James, and thank you for listening. I'm Pierre Bourque. This is Blockchain Radio.